Good evening to all our mentorship traders. 23rd of April 2021, Friday evening, 9 p.m. As always, our mentorship invest meet. We'll talk about the markets first and then talk about some opportunities which lie in front of us from an investment perspective. I have the Nifty futures daily chart open in front of you. Now, tough times, definitely. Gap downs, gap up, failure to hold on to the gap up, bounce back, and so it's all over the place. If you look at very closely, if you look at the last 4 days trading session this week, we can clearly see a 14,150, 14,500, 550 kind of range. The index have been fairly volatile. Long lower shadows. Today was like a doji. On the 20th, it was a gap up, then it slipped. On the 22nd, it opened weak, then bounced. So it's all over the place. It's volatile. The short term as well as the intermediate term trend are both down. Some degree of momentum price divergence we can clearly see over here is quite evident. I'm using the RSI 9 period down here. But rather than the Nifty, it is few large cap stocks, the Bank Nifty, which suggests that the markets will try its best next week to bounce back rather than give away. Strategically, I would suggest that one should continue to stay cautious. I've been, using this word quite often and saying that this is probably not the best of time to chase returns, but to try and preserve the capital and trade less, trade smaller, and wait for this volatile environment to pass through. It's been a couple of months now that the markets have been non-trending, so as to say, and volatile. But that's because if you look at the weekly charts, it will make sense to you. We had an amazing run up, and so what we have here is like a complex multi-week correction. This can take a shape of like a falling wedge, and if it does seem so, the breakout on the upside can give a nice move. But that's from a slightly medium to long-term perspective. I'm not going to keep this drawn here. So what we are going through is essentially a healthy correction, consolidation, whatever you call it. The market needs that, and we have to wait patiently for the right opportunity. Now, the reason why I say that the possibility is slightly there for the Nifty to break above 14,500 and then 14,700. First is 14,500 is because primarily the Bank Nifty, if you remember this chart, we had drawn this red line few weeks back, and we had this breakdown. It's at a decent support zone, pretty good support zone, little above the psychological 30K mark. We've got a chunk of volumes happening here. We've got highs and lows. We've got a couple of times the index has respected this zone, turn it into a line chart, and you could start to see some divergences, which suggests that the rate of sell-off should slow down. It has slowed down. We've got a bullish engulfing. The index is trying to bounce back. We've checked time and again that this correction from a high to low basis has been close to 20%. It's 19.5%. 19.5% on the Bank Nifty is not a joke. It's not a small number. And so I feel that the index will probably try its best to give a bounce back. It did yesterday. It tried to hold on to itself today, which was completely flat. We did see some movement coming in PSU banks like SBI, PNB, Bank of Baroda, but then it slipped. Nevertheless, next week we have expiry. Volatility can stay, but I think the first 2 days, Monday, Tuesday, would probably show us the path going forward towards Thursday. Importantly, I would suggest keep a very close eye on the Bank Nifty, the constituents of Bank Nifty, and the financial stocks. And if they take out today's high, mentorship trade, you would know that this is a decoy bar over here. We call this bar a decoy bar. So if today's high is taken out, if by any spurt of momentum. If today's high is taken out, then we might see some decent size move coming in. The banks, the bank Nifty financials also included. That's got close to 35% weightage in the market, and so overall, this is the pocket which can bring in a bounce back. And so let's stay cautious. Let's not create any strong bias on the upside or on the downside. But then when we look at few large caps, the banking stocks, others, we feel that there's a chance. There are other stocks like Reliance, there's stock like Larsen and Toubro, few auto counters also, which suggests that a bounce back is around the corner. Let's see. Let's take a look at the behavior of the sectors this week. I'm using the RRG chart on the stockcharts.com platform. I've reduced the tail to 1 week, sorting it out in terms of percentage change, and we've got some gains from media. It doesn't matter. This is primarily I track PVR and Z, so this doesn't add a lot of weightage to the markets. Then we've got pharmaceutical stocks. They've been rallying really well, but this week's kind of softened out. But it was real estate, PSU banks, FMCG, consumer play, consumption, infra, IT. Most of them, all of them were down in the tone of 1, 2, 3, 3.5%. The funny thing is, if you look at the tail, this is the leading, lagging, weakening, improving kind of sector. It's all over the place. Let me sort it in terms of the tail. And if I add it to, let's say, 12 weeks, which is close to a month, then we can see metals been holding really well, and we'll look to buy on dips metals. There's no doubt about it. Small and mid caps also doing exceptionally good. And we'll be talking about energy very closely. We've been talking about energy for the last 2-3 weeks, saying that this guy is an improving quadrant, should try its best to go to leading, and now it has managed to. So let's take a look at the energy. Over here in trading view, I have the oil and gas. And I spoke about Reliance. Now this stock has not been performing. It's stuck in a range, big range over here. We've got some divergences kicking in down here. We've got a Doji. So it'll be interesting to see whether Reliance performs or not next week. But the guys which performed, we've got a bounce back from Petronet. It was an extremely sharp bounce back. I did talk about MGL, IGL last week, I believe so. Nothing much. IGL on a weekly basis, we've got nothing much. It's just 1% down, in fact. And MGL gave a bounce back from the weekly low. We've got 0.23% up. But MGL, IGL stocks seems all right. Then we have the oil marketing companies, IOC, HP, they're completely flat, and BP also, BPCL, they got some gains today, and it was yesterday. So overall, it's got a mixed space with the big names, Reliance, ONGC, Gas Authority of India Limited, on a softer side. But I feel that it's a Reliance which is going to play a part. Not because it's broken down, not because it's beaten down. We can talk about this later in our invest session also. This is one counter on the weekly charts which is coming close to its supports. The daily is giving us an opportunity of a bounce back. So if this has to play out, I think MGL, IGL, few short-term breakouts from BPCL, HPCL, IOC, but those are all trading counters. But the key would be, I think, from RIL if this has to sustain. Apart from that, pharma has been doing good. It has moved up to the improving, so buy on dips for sure. FMCG, Hindustan Unilever, I would definitely want to bring your attention. These are primarily all futures charts. That's what I generally focus on, futures and options. So this is the futures chart. Now, this is the daily chart of Hindustan Unilever. Sharp sell-off over the last 5 days, 2,300 oversold. Weekly charts, one big long red candle taking the stock down. So good counter to buy on a dip. So wait for the range to contract. So within the FMCG, as we were talking here, and consumptions play. So keep an eye on these stocks. What do we have here? If you allow me to take a look at the FMCG, which are there in the F&O market, I'll quickly take a look. Colgate Palmolive is weakening, not so good. It supports the Godrej CP consumers is still okay. We spoke about Hindustan Unilever, ITC struggling again, teasing that psychological 200 mark yet again. I don't know how many times it has managed to do that. In fact, I'm quite surprised that we don't have our usual support drawn for ITC. Let me turn it into a line chart to see the efficacy. Looks fine. Yet again, I don't know how many times, 1, 2, 3, 4, 5, 6, and multiple times. Let me just quickly extend this on the left hand side to show you how important this psychological level of 200 has been for the stock. I'm going to just adjust this zone so that it's essentially not curve fitting, but trying to figure out a wider range for the stock, which has been an important zone. So this is it. This is the story of ITC. It's creating, it has already created a very strong. So ITC, Hindustan Unilever, Jubilant Food. Now this guy is picking up well. So this is also one stock you can look to. Marico is another one can look to buy on a dip. McDowell in a strong downtrend. Contrarian play, but I will not be so interested. Nestle, it's come off again. Tata Consumption, consumer products is very strong trend. Look to buy on a dip. And UBL, I have it on my red flagged off. It's not a very strong counter. So I would say if FMCG has to show strength, like it has now moved into improving, and maybe it will try to go to the leading quadrant, then Godrej Consumer, Hindustan Unilever, ITC, Jubilant, Marico, Nestle, and of course Tata Consumer. These are the stocks that you should definitely keep an eye on. Apart from that, this Fin, Private Bank, Bank Nifty, PSU Bank, all of them have come down to the weakening. All of them. So what's the quadrant going forward? Are they going towards lagging and improving and leading? I feel they will try and give us a move up. They will gain some momentum first, and then maybe the next move. Auto has been losing momentum now at the inching close to the lagging quadrant, but there are few stocks that you can keep a close eye. If the market supports well, we might get a bounce back next week. Stocks like Ashok Leyland, TVS Motor. I was taking a look at Asher Motors also. Now these are all short-term bounce back candidates. Their stocks, their trends are all down, but considering the kind of supports they're kicking in, you can see Bosch, very nice supports. So auto ancillary stocks can give us a short-term bounce back next week. Keep an eye on these. But overall, the sector is lagging. So mainly a short-term play, not to buy and hold for a longer period of time. Let me quickly wrap up this call on the Nifty and the markets. Stay cautious. Number one, stay cautious. The trend over the short term and medium term is down. 14,500 bare minimum first level, then 14,700. Considering few large cap stocks and the Bank Nifty at good supports with divergences, etc., we might get a short-term bounce back next week. Or will the market wait for the expiry and then decide afresh? That needs to be seen next week. But whatever it is, I would suggest do not go overly short at this juncture. If you're going short, make them keep the trades as limited as possible in terms of time. But these are difficult times. These are volatile times, and we have to stomach this. We have to wait for it to pass, and then maybe the next half of the year will give us good opportunities, good trending opportunities, that is. All right. Thank you for listening to my take on the markets. Now let's move ahead and talk about what are the stocks we can focus on to invest in.